inverted, but let's talk more about the curve. Are high interest rates the new normal? A little bit of a kind of clickbaity title, but I feel like it's actually a pretty truthful time to be talking about this type of clickbaity content, given how high interest rates have gotten, Mike Butler, but how high they've actually stayed and extended. Because a few weeks ago, interest rates popped higher on inflation worries. The Fed is going to act. They're going to hike more frequently, X, Y, and Z. But now we've gotten back to those highs, which tells me, one, that interest rates are staying bid. They're staying high, but they've actually broken through them, depending on where you're looking, to the tune of 20, 30, 40 basis points in the short end of the curve, and 10 to 20 basis points in the longer end of the curve. I mean, interest rates across the curve, Mike Butler, are the highest they've been from 2010 until now. So over 12 years of data. And are you particularly interested in how high interest rates are, or the relationship that we're seeing here, whereby 10s and 30s only like 10 or 20 basis points higher than their old highs until now, whereas the 2-year is almost half a percentage point, almost 50 basis points higher than its old high for the last decade plus?
Yeah, I think it's super interesting, especially for the younger folks, because you probably hear this too. Like, your parents are probably like, yeah, back in the day, a mortgage rate was 15%, and you could put your money in a savings account and get 7% a year. And it's like, oh, that's impossible now. But like you said, we're increasing these rates, and it's changing the landscape of the market, as you're seeing today and the past couple of days, where when interest rates are higher, you see the market sell off. There's less interest in potential investments, but there's just so much going on right now. It's like we're drinking from a fire hose with like Bitcoin and crypto and how that space is going to play out. And now this inflation stuff, it's a lot, but it brings a lot of opportunities.
Absolutely right. And what's nice about this asset class is there's so much, you hit on this a little bit, there's so much history to it that we can really contextualize. And for me, as an active trader who's trying to make money, today, tomorrow, this week, not really worried about necessarily the new normal or the long term or whatever, but it's interesting to talk about. You got to look at a chart like this, and you got to look at a statistic like this, whereby 2-year interest rates in the US have not been over 3% since 2008. And I look at that as short-term opportunity to be short this outlier market. But that being said, the larger conversation, the macro conversation is, are we getting back into that environment, that pre-2008 environment that held in pretty well? Because I'm not going to BS here. The data that I'm looking at for U.S. interest rates from 1990 until 2008 were pretty consistently above 3%, with highs at 6 or 7% in interest rates here. In the short term, I think obviously this is an outlier move, and not only an outlier move in terms of pricing, but the pace. Look at this rally. Like, this is within a couple of weeks, we've blown through 3%. And even you take a larger view, and it's a couple of months that we've gone from 0 to above 3%. I think maybe we do see a nice reversal back below 3% in the short term. But something to maybe debate with your friends over the weekend and everything is 2022 until 2030 or what have you going to be similar to the 90s and the early aughts? What do you think?
I think it very well could be, just because of how low the rates were and how the market was ripping higher and creating these totally inflated equity values and price valuations. I think, and what's the way to battle inflation? If we're going to have this crazy heightened inflation, I think all signs point to probably, but
yeah.
You never know. Well, and this is what I said earlier too, like this market movement, the fact that we're down 300 points, more than 300 points in the last 3 days. And now we have a Fed meeting on Wednesday. They could say something surprising. I don't know if they will, but I would be tuning into Wednesday for sure. Like this is one of those Fed meetings where it's like, okay, I'm going to watch this and just like see what they say, where other ones I'll just see what the market does. But this one, I think a lot more people are paying attention to.
100%, as they should be. And yeah, like I say, I think in the short term, I think there is room for reversal here. I mean, you just look at this ascent in rates. And when we got up to, 2.5% or so, there was a nice pullback, a nice kind of settling down and everything else. And I think we're due for another one of those here above 3%. But the larger conversation does become, was 2008 until 2022, was that the outlier? And, we're just getting back to normal. Is the new normal the actual normal here in rates? I'm not totally sold on it. I'm always going to be a sucker for an outlier here. It's easier for me to put data to something, Mike Butler, than it is for me to be like, I think that we are going to get back to 6% interest rates. And the data here says for the last almost 15 years that these are the highest prices in 2-year yields. That being said, I would be looking at being very just cognizant of how much this market is moving. And if I'm selling 32s in S2Y and I'm looking for $100 or $200, I might be looking to, take a loss at 34 or 35, or, sell options in the other markets. This market will have options soon, but defensive mechanics and losses in the last piece here, along with, the active trading and everything else. We do have an FOMC meeting on Wednesday, and now they're talking about either a 50 basis point hike or a 75 basis point hike. But I wanted to show everybody here as a last piece that the projections for a year or two in the future, which would kind of fall in line with that 2-year U.S. Treasury yield, the projections are close to 4%. So while there's obviously downside in rates all the way from 3.25% where we are now down to 0, there's also upside because they're projecting 4% or even greater for Fed meetings in the middle of next year.
Yeah, and this is what you have to do. You can't be like, I'm going to put everything I own into the short at 3%. You have to account for the possibility of continuation here. And that's why these products offer us to do that, because even if you're doing a 5 lot or 10 lot, it's still very small relative to some other products.
Absolutely right, Mike Butler. Thanks so much for joining me on quite the manic Monday. I know John McGloin loves that tune, and so we'll throw it back to John and Splash into Futures coming up next. Everybody, thanks so much for watching. If you need anything, reach out to me on Twitter or email around trading futures and everything else. I know it's a hectic one here, but Splash into Futures is up next. Stay tuned for that. Thanks, everybody. Peace.